So back in 2018, when I started to make a little bit of money online, I saw it as an opportunity to really get my finances in order. So as I started making money online, obviously the first things I wanted to do was obviously pay off debt. So obviously the first thing I did was pay off my student loan, and then eventually I paid off my credit cards. So once I did that, then it was like, all right, now it's time for me to start thinking about investing in the stock market, right? So I wanted to make sure I organize my my money so I get to a point where I know exactly what I'm allocating. So obviously I opened up different bank accounts, and I was like, I created accounts where I had an investment account, a travel fund. I had just different accounts, so I know exactly what I was the intended purposes for these accounts were. So once I did that, and all right, this is how much I'm gonna, invest every month into the stock market. I didn't have to research which stocks would I be investing, because I was a new investor, and I didn't really know which ones to invest in. So obviously, like many of you guys, I did my research on YouTube. I came across obviously this person called Stephen Graham. I think a lot of you guys know who he is. He's a popular finance YouTuber that delves in the finance space, and he talked about this 3-fund portfolio where you invest in index funds. So the three index funds that he mentioned, I'll show you right here, was the first one was VT Sachs, which is the Vanguard Total Stock Market index fund. Another one was the VTIX, which is the Total International Stock. And then the third one was VBTLX, which is a Total Bond Market fund. So these were three that he mentioned if you're someone that's getting started. And then obviously it's an index fund where you have different companies within that index fund. So, but I don't know if you noticed, with each of them, the minimum investment was $3,000. So for me, obviously, once I was started making money, I was I had that, so I was all right, let me just do it, since I did have the money to do that. But I'm guessing for a lot of you guys, you don't have $3,000 to just drop on a stock. So. And this is why, so in this video, I'm just going to break down, I'm going to share with you some stocks. If you're a beginner, I'm going to share with you 3 stocks that you can get started with, where you don't have to throw down $3,000. And that's going to help you, as someone that's getting started, if you're nervous about, all right, where do I start? How do I get started? What should I invest in? In this video, I'm just going to show, if I was a beginner, these were the ones that I would invest in today. So, And the ones that I'm showing you, they're all index funds. And let me just break down the difference between an index fund and an individual stock, and why I'm recommending index funds. Because with the individual stock, which you could find stocks that are more affordable to invest in. But the thing is index funds individual stocks can be a little bit riskier. It's obviously one company that you're investing in, and the thing is there's really good rewards, high rewards, but then there's also a lot of risk when it comes to investing in an individual stock. Just say for example, if the company goes out of business, you're gonna lose all your money, right? As opposed to if you invest in an individual index fund, where there's a bunch of companies within that stock. Let's say one of those companies go out of business. You don't have to worry about losing so much money within that index fund, right? As compared to the individual stock, where if that company goes out of business, you lose all your investment. So, and that's the thing, and that's why a lot of people, especially if you're a beginner, I would recommend investing in an index fund, because it's just much easier. It doesn't require a lot of research compared to individual stocks, where you have to research that an individual company, look at their finances to see if they're a good company to invest in. So it requires a lot of research compared to an index fund. It requires less research, and you can just passively invest that into your account. So that's just a quick breakdown. So the 3 stocks that I would recommend. For if you're someone that's beginning, I would invest in, is the first one would be, let me go into my M1 Finance. M1 Finance is what I usually use. So the first one would be VOO, right? VOO. And the good thing about this one, this index fund tracks the S&P 500, right? So it's the top 500 companies in the United States. And the good thing is that you have all the best companies like Apple, Meta, you got Amazon, all the top, companies in the country. So let's say if any of these companies go out of business, you don't have to worry about losing so much money in this index fund. You'll still make good returns. And you're probably looking at this and you're saying, wow, $400, that's a lot of money. The good thing, especially with a lot of these platforms like M1 Finance, Robinhood, you can do fractional shares, right? You don't have to buy the whole thing. As compared to that index fund that show, you have to put down a minimum $3,000 to get started. But with a lot of these ETFs, you can still get that you can still get invest in companies within the S&P 500 without having to drop $3,000. And like I said, you don't have to drop the whole $402. This is what the price is as of today. You don't have to drop the whole 402. You can fraction share that. Whatever you have, every month you can drop into this fund, and you can get the actual actual, benefit of investing in the companies within the S&P 500. So, and the good thing about this is also, like you see, the expense ratio is 0.03, which is very, very cheap, right? And they have a dividend yield of 1.52%. And you want to find stocks that have expense ratios where they're low, because for a lot of people, they get caught up in the fees, which is very expensive. And the good thing about these index funds and ETFs, that they have really low expense ratios where they don't really cost that much to hold. So that first one is obviously VO. That's one that I have a bunch of shares in right now. And like I said, it's $402, but you don't have to drop the whole 400. You can obviously every month you just put into it, and you can passively invest in this stock. So this is one I would recommend, and this is one where regardless if the market is going up or down, this is something I dollar cost average every month, and you don't have to worry about if one of the companies go out of business, you lose your fund. And like I said, there's a lot when it comes to individual stocks. Obviously, the returns are greater, but then the risk is so much higher. With the ETFs, like I said, like the returns aren't as great as individual stocks, but the losses aren't as big as individual stocks. So the second one would be, and like I said, this tracks the S&P 500. The second one would be VTI. Right, the second stock I would invest in as a beginner is the Vanguard Total Stock Market, right? It's VTI, right? Now this tracks the whole stock market as a whole, and like I said, this one's like $217. But like I said, you can fractionally share whatever you have to allocate every month. I would do that and build up as you go, especially as a beginner, right? And like I said, the expense ratio is 0.03, and again, dividend yields 1.52%. Like I said, this tracks the whole stock market, so this is a good one to invest in as well. I have a few shares in this one as well. And then now the next one is a VDC. All right, so this one is Vanguard Consumer Staples, and keep in mind, like the person that recommended this is recommended these ETFs. I don't know if you follow what's his name, Minority Mindset. He was one that recommended this as well. So he's also a big YouTuber in the finance space as well. So, and this one's Consumer Staples, and the good thing about this is like Consumer Staples is basically like, if you look at their top holdings, is like PG, Procter and Gamble, Coca-Cola, Walmart, Colgate, Pepsi-Cola. These are business companies that, regardless if, let's say, there's a recession, right? These are things that people need regardless, like the medicines, right? Food. These are things that people need regardless if there's a recession or not. So this is more like a hedge for just in case like there's a recession. Now the returns aren't as big as like, let's say, the VO or VTI, but like I said, like during times where there's the markets aren't doing well, this is a great stock to hold, and it does pretty well, especially in times where there's situations where the economy isn't doing so great. So this is something that I like to hold as well. So these are the three that I usually like, that I currently invest in, and I do these like passively, right? And like I said, like there are other ones that you can invest in, like, and it all depends on your strategy, right? Your investment strategy. Like there's so many, like if you're someone that's trying to build up on income, there's obviously stocks where you can focus on dividend incomes. So it's different strategies, right? This is just like these are just stocks that you can invest in if you're someone that's beginning, know where to start. Like these stocks are pretty good. Like overall, these are ones that I invest in passively. And like I said, I'm not a financial advisor, so obviously don't take your advice from a YouTuber. But if I was someone that's getting started, these are things that I would obviously get started. And obviously you want to do your research as well. But these three are the ones that if I was getting started today, these are ones that I would definitely like get into. And like I said, these are fractional shares. You don't have to put in the whole $194 for this one. And you can do these passively. Like as you gain experience and as you're building experience as you get into the market, then as you get more experience and you want to build up your research, and if you want to invest in like individual stocks, then that's something you can do, right? You can build your strategy around that, right? And if you don't know, then obviously you can talk to a financial advisor and they can develop a strategy for you. But like for these like ETFs, these are great ones because it doesn't require you don't need a financial advisor for these. Like you can just put your money every month passively and like, you know, obviously dollar cost average these like every month. And regardless if the stock is going up, whether it's going down, it's something you do every month, every week, whatever it is that you, whatever strategy that you use, and you can just, you know, reap the benefits of you know, at least getting started with investing, right? Because for a lot of people, they just, like I said, they don't know where to get started, right? They're nervous. They obviously think the you know, stock market is rigged, so they're like, you know, they don't want to get involved. But if you're looking to build passive income, if you're looking to build your wealth, you have to get involved in the stock market, right? Like you can't just rely on active income to help build wealth and help get you through the rest of your life, right? You need to start getting involved with these companies and these stocks and start building wealth in a variety of ways. And this is, like I said, this is just one way of investing, right? Obviously, you got real estate, you got, you know, businesses. These are so many ways, but like getting a piece of a company is something we all should be doing if we have obviously, you know, had the means to do that, right? Obviously, you want to make sure you get your finances in order. Make sure you're paying down debt. You know, have an emergency fund set aside just in case, you know, there's an emergency, because you don't want to dip. Let's say you start investing in the stock market and an emergency pops up. You don't want to have to then dip into your portfolio to help pay that for that emergency. You want to have an emergency fund set aside so just in case. So yeah. So these are the three. Like I said, VOO, VTI, and then VDC. These are three ones that I would invest in if I were getting started today as a beginner. So, and as you develop that experience, then you can then eventually like delve into like other forms of investments, like individual stocks, and, you know, go from there. So that's all I got for you guys today. If you got any comments or questions, make sure to leave it down below. Hit the like button, share, and if you haven't done so already, make sure to subscribe. All right, so you guys take care and have a good one. Later.